Oh, I really wanted to be off for the day. And the second I post my other video, what happens? Oh, Elon Musk just sold casually $3 billion worth of Tesla shares, which we knew it. We knew it. We didn't know it with certainty, but let's put it this way. When Tesla volume has the highest bar, see that line right there at the bottom? When that bar is so high, to the point where we have not seen that height since the meme era of October and November of 2021, we know something crazy happening, okay? I mean, we briefly broke that downtrend down there, and it's already a bad downtrend. So we need to talk about what this means for Tesla stock going forward. Is it good or is it bad? And I think it's time we just break out the fundamental analysis again. First, you have to understand something really important when it comes to executives like Elon Musk selling shares. You have to ask yourself, why are they selling? If you have a company that the executives don't believe in, like Carvana or Open Door, guess what you see for the months before you start seeing pain in the financial reports? Sell, 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 sell. You see real fundamental problems from the red flags of insiders selling. Insiders selling are often a red flag of problems to come at the company. In this case, we do not believe that Elon's selling are red flags of problems within the company, although they can be. Elon Musk, with certainty, we know this, he's told us this on earnings calls, knows what the deliveries are like and the orders are like for Teslas on a day-to-day basis. Elon Musk can probably see orders at Tesla plummet or cancellations skyrocket when he tweets stuff like prosecute Fauci on Twitter, because even if you think that is right and justified, some people who might be Tesla order holders are not going to appreciate that, whether or not it's true, okay? We're gonna move past that because we don't want to be political in this video. So it is possible that Elon Musk is selling because he fundamentally sees, Q4 earnings are gonna be bad, and Q4 is January 22nd for Tesla is when their earnings call is. I believe it's the 22nd. It's either the 19th or the 22nd. It's right around that range for January. But the point is, Elon Musk might be thinking, I better sell now because the stock could go down more. And if the stock goes down more, then it's going to be very difficult for me to raise more money in the future. I'll have to sell more of my Tesla shares in the future to fund my other projects. In this case, rather than take out a margin loan against Tesla stock, which was rumored a week ago, and boy, oh boy, was that an indication that Elon was about to sell. What did Elon tell us today on Twitter? Don't take out margin, boys and girls. Stay away from leverage. He replied to someone's tweet suggesting you stay away from leverage when it comes to stocks. What was he considering last week? Taking out more margin against Tesla stock. Apparently, he decided against that, and then instead, after selling, tweeted, hey, long-term, Elon's goal is to see Tesla investors benefit from the Twitter acquisition, and boys and girls, stay away from margin, which in a recession is actually sage advice. Now, keep in mind, I am a financial advisor. This video is not personalized financial advice for you, but I think the smartest financial advice anybody can give is don't be in margin going into a recession. That is the worst thing you could do, because there could be really bloody things that come up between now and when the recession actually bottoms. So, yes, usually insider selling is a bad thing. Yes, it is possible Elon Musk is aware of short-term, very negative catalysts for Tesla. Yes, it makes sense not to go in on margin, and it makes sense to have some cash on the sidelines. It also doesn't help that Elon Musk has regularly tweeted things like the following. If the Fed raises rates again next week, the recession will be greatly amplified. Don't mind the fact that that was a week ago, and what did Federal Reserve Chairperson Jerome Powell to do today? He raised rates by 50 basis points. So yes, Elon also sold right before the Fed meeting. How interesting. Anyway, all of that aside, it is now important to understand that, yes, this is inconvenient for a for a short-term Tesla shareholder. But what does it mean for a long-term Tesla shareholder, and could it be a buying opportunity? Well, that depends. First, when you see liquidity so thin like it is now in a recession where everybody is dashing for cash and you have funds like BlackRock all of a sudden saying, we have no cash, we can't do any more redemptions because we've hit our limits because everybody's trying to pull money out of stuff. What happens? Well, dips can't be bought as much as they used to be able to be bought. This morning, I posted a VandaTrack research report that showed retail dip buying actually fell to some of the lowest levels we've seen this year. And the average of the past few weeks is about 20% lower than the average we have seen over all of 2022. That's because we've shifted down from about $1.2 billion of retail stock buying to about $1 billion of retail stock buying on the daily. Unfortunately, when you look at the order book, Elon Musk's selling over the last few days, specifically, it seems like most of the shares were sold in the 12th, is so heavy, $3 billion worth, that every single retail purchase of stocks in every single stock combined over the last 3 days would have had to been Tesla stock just to offset Elon's sales. Think about that for a moment. Retail buys an average of $1 billion a day. Elon just sold, $3.5 billion. That takes 3.5 days of all combined retail purchasing power out of the market. You're going to destroy the order book. The order book gets reamed when Elon sells large chunks like that. It is such unfathomable, unfathomably large amounts of money that when you look at it that way and you go, oh my gosh, no wonder the stock plummets when you think of it from an order book point of view. Yeah, because remember, not every retail purchase is Tesla stock. Duh, because there are other companies. In fact, in the report that we did this morning, we actually broke down where retail purchases are going. And you can actually see a lot over the last 5 days. The 5-day average, we only had retail inflows of about 609 million. But Elon Musk sold 3.5 billion. And then you had obviously money go into other retail stocks like Apple, Amazon, Nvidia, AMD, Meta, Netflix, Alphabet, blah, 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 right? So, okay, short term, is it a red flag? Hell yeah. Because if Elon Musk thought, oh man, Q4 earnings are going to be great, why would you not wait until after those earnings? Well, maybe on one hand, because you think the Fed is going to be evil to us, or you're just saying you think the Fed is going to be evil to us, when the reality is Q4 earnings are going to suck and miss expectations. Short term, this is terrible news. Long term, this kind of order book crush where you absorb 3.5 days of the entire stock market's retail buying in one stock, long term is actually a phenomenal buying opportunity. See, I'm a long-term shareholder of Tesla, so I want to be very, very clear that I have tax loss harvested a tiny portion of my Tesla stock yesterday. I just wanted to clear out my Webull account, which had a small fraction of my portfolio. So I did a little bit of harvesting yesterday. I then bought an actively managed ETF that has a good exposure to Tesla, so that way I'm able to take a tax benefit on a harvest while moving into something that's at least substantially different. Always check with your CPA, obviously. And that way I'm still getting some upside exposure in the event that there's a rally in the future, but I'm also diversifying into a much more tax-efficient vehicle than holding an individual stock. I'm in an actively managed ETF that can rebalance without passing on massive capital gains or potentially any capital gains to me. There's a big advantage to that. But look, long-term, this kind of order book destruction at the same time as institutional investors find Tesla potentially uninvestable for political reasons or because of fear that Twitter is going to continue to be a drag on Tesla stock, rightfully so, it has been, and clearly today continues to be. Well, those are bad short-term catalysts, phenomenal long-term catalysts for a Tesla investor. It's very difficult to find the bottom in a stock, but right now, it just doesn't feel like the bottom is close, especially with Elon selling, although hopefully maybe that selling freaking stops already. And maybe we're good for a couple years. It'd be phenomenal. Elon, if you're listening, if you're allowed to do this, run it by your SEC babysitter. Could you let us know something like, hey, the way things are now, I have enough cash to fund Twitter for the next 3 years. That would be really appreciated. Okay, so let's do some fundamentals. Keep in mind, fundamentals do not predict short-term price movements. Fundamentals do not tell you that the CEO is about to dump a bunch of the damn stock and go buy another pet project and fund that money-losing pit of a pet project you're making lose more money by making stupid political statements with the stock that somebody else is trying to do a fundamental analysis on. Not bitter. Anyway, so let's just try to understand this. Let's play with this a little bit. I'm going to change some numbers here. Let's go to 2025. Let's assume the average revenue per vehicle on a Tesla stock in 2025 is around $47,000. Let's keep, I'm really going to keep FSD, Tesla taxi, Tesla semis. I'm going to keep most of this stuff at zero. I'll just assume whatever FSD sales we have go into the actual top line average selling price per vehicle. We'll keep leases around that 3% number. Services tends to be a break even, although it's slightly turned profitable recently. Energy, we'll keep that around 1% as it scales with total revs. Margin, we'll keep that at 30%, assuming we get some deflation, although we are seeing lithium go up. That should really only affect Tesla's cost per vehicle by, a factor of maybe $100 a vehicle with some of the lithium inflation we're seeing. It's actually not that heavy of an expense for Tesla. Certainly commodities like, metals are going to be much more impactful, I believe, to Tesla. Coppers for motors and such. Anyway, expenses on leases, we're going to go with that 30% profit margin. I actually do have about a 5% margin in here for services. Again, zero on insurance. That's just icing on the cake. It's called a margin of safety. Again, fundamental analysis is not technical analysis. It's not going to tell you about hell going forward. It is possible that we have more shares outstanding in the future, although if Tesla does conduct a share buyback, this could actually be less. We'll keep it stable for the purposes of this video. The beautiful thing here is that at $180, which the stock is not selling for $180 right now, at $180, Tesla's forward PE to the end of 2024. Actually, wait a second. I have to change this. That's at 2.1 million vehicles. I expect 2.1 million, 1.9 million vehicles probably for 2023. Let's go with, you know what? Let's just go a little bit more, maybe conservative. Let's go like 4.5. Okay. Let's go with 4.5 for 2025. 4.5 million vehicles. Oops. That's actually less than what I've previously analyzed. So a little bit more conservatism. So if I do that, you can see the growth rates over here in vehicle production would be about 35% for 2023. It's not going to be this high. Hold on a sec. Let's change this. Let's make this realistic together. What's this going to be? This is going to be like 2.7. Come on, let's do it together here. 2.7. That's realistic. Yeah, if we get out of the COVID area, potentially realistic. Let's drop it a little bit more. There, I'll go with 4.2. I'll go with 4.2. Let's just be as conservative as possible, assuming all of these vehicles get sold. If the vehicles stop selling, the growth story collapses, Tesla goes to trash. The only way Tesla is actually EPS recession resilient is if all the vehicles sell. Notice how I said EPS recession resilient and not Twitter or political BS resilient. Sucks, but it's just the reality we're dealing with. It is what it is. Don't worry, we still have time to buy real estate. Anyway, that puts our PE ratio, price to a forward price to earnings ratio. Is that true? $11 EPS 2025. That puts our forward at just $15 forward. Are you serious? I guess so. 4.2 million vehicles at 47,000 a vehicle. Revenues of 224. Expenses of 30%. We're going to bring 15 mil of OPEX down. Total expenses 175 gives us a profit of about 50 million. Taxes will pay 19%, maybe a little less with some energy tax credits. Remember, the energy tax credits are actually going to prop up this right here. The average selling price per unit is actually probably going to be higher because of the energy tax credits, but let's just include that as a margin of safety. We'll leave that at 70% profit per vehicle. Expense per vehicle, 30% profit margin. So if we go over here, that's a forward price to earnings ratio of 15 at $180 a share. We're not even at $180 per share right now. That puts Tesla's PE ratio in 2025. Well, if Tesla's PE ratio in 2025 is 50, okay, that implies a more bullish market and a serious growth rate. Like, okay, now Tesla's actually cranking semis, or like cyber trucks, and we're like, okay, people are betting on Tesla again. Okay, that's what a 50 is. Well, a 50 with, I think, these relatively conservative numbers gives us a $600 price target, roughly $585 price target for Tesla. If the present value is 180, just to stay consistent with this, that's a 48% compounded annual rate of return over the next 3 years. That's really freaking good. Okay, but Tesla ain't selling for $180 a share. What's Tesla actually selling for? Oh, damn, $156 per share. Oh, well, if I put $156 per share in, oh, that just makes the compounded annual rate of return about 55.4% over the next 3 years. Holy crap. This is, if you can hold on to Tesla until 2025, this, no guarantees, not personal financial advice for you. If all of these assumptions come true, this looks like the mother effing frickin' buying opportunity of a lifetime. That's what this looks like. I mean, honestly, you could go in here and drop the PE ratio to Apple today, and Tesla's not going to be at maturity in 2025. But you go to Apple today, you're still at 351. That's still a 31% annual compounded rate of return over the next 3 years with pretty, in my opinion, conservative assumptions. The biggest non-conservative assumption is that Tesla sells all the vehicles it makes. That must be true. But if, look, you're not a Tesla investor if you don't think Tesla's going to sell every vehicle they make. You have to believe every vehicle they produce gets sold. If you don't believe that, don't own the stock. My take. Again, I'm a licensed financial advisor. I run an actively managed ETF, but I cannot give you personalized financial advice. So this is actually long-term glorious, short-term very bearish. It is short-term very bearish because of what I've described in this video. And at this point, all I have to tell, there's more we have to talk about, but I do want to remind you that we have a coupon code expiring tonight. It's coupon code PP, okay? Stands for pricing power. Link down below. It expires tonight. We did extend it from Friday because we were ringing the bell at the New York Stock Exchange, and we didn't get, well, let's just say I neglected making sure we got back to emails and helping myself because we were all stressed and running around the New York Stock Exchange. My fault. So we've responded to pretty much every bundle coupon request email already today. So we've been doing very, very well. Okay, so what else has happened? Okay, well, another thing that happened is we actually saw Elon Musk potentially sue the person who's been revealing the location of Elon Musk's jet, because apparently there was an incident where Elon Musk's vehicle carrying his son, X, was followed. And then not only was his son followed, but somebody jumped on the hood of the car thinking Elon was in it. That is disgusting. That is so bad. Now, I have made multiple videos today imploring Elon Musk and the Twitter staff to please make sure that if they make rule changes, they apply the rules equally. There cannot be hypocrisy. There must be rules applied equally. If you ban private jet location sharing, which is protected by the Supreme Court and protected by the First Amendment, then you must ban it for everyone, not just your jet. But it looks like that's exactly what has since happened. Elon Musk states any account doxing, revealing real-time location information of anyone will be suspended, as it is a physical safety violation. This includes posting links to sites with real-time location information. Posting locations someone traveled to on a slightly delayed basis, we believe that's about 24 hours, isn't a safety problem, so it's okay. Last night, a car carrying little X in Los Angeles was followed by a crazy stalker, thinking it was me, who later blocked the car from moving and climbed onto the hood. Legal action is being taken against Jack Sweeney, the person who ran the Elon Musk, Elon's Jet Twitter account, and organizations who supported harm to my family. I'm going to just take a deep breath here and first of all, express condolences. This is disgusting. Nobody should show up at your home. Nobody should show up where your car is. This is wrong. It's not okay to do that. There are formal ways to meet people at events, not at people's homes or around their personal locations. I do think that some of the action taken by Elon Musk was a little rash in response to this, but I also respect why it was rash. His son's safety was jeopardized. I totally get it. That's terrible. Rashness should be prevented on an executive level, and I think it will be in the future. I do think it might be a little bit extreme to suggest that legal action is being taken against the founder of the Elon Jet account, because Elon Musk did say he would not take action against somebody tracking his jet because he deemed it free speech. Elon Musk himself said tracking his jet is free speech and he won't take action against it. So it's one thing if now you got scared, rightfully so, and then you make a rule change on Twitter, and then you say, yo, Jack Sweeney, stop tracking my jet. It's against the rules now. And then Jack stops. That would be the appropriate way to do it. But to say, it's okay for you to track my jet. Holy crap, it's not okay. Now I'm suing you. That's not okay. I don't actually think that legal action is going to go anywhere because of what I've just outlined. However, it is going to make for a very clear rule change at Twitter, and that is rightfully so. And again, I want to be very clear that if somebody did that to my child, I would be losing it. I don't even want to speculate, okay? Like, I feel like I'm getting teary-eyed thinking about it. So even though that has not happened to my children, I feel as though I can at least sympathize, maybe slightly empathize. Obviously, I haven't been in that situation, right? That's the difference between sympathy and empathy, right? Is having been in the situation versus not. So I get it. These are my thoughts. So what did you learn in this video? My price targets for Tesla, my motivation and my belief in Tesla. I did reveal also some actions that I've taken with Tesla stock in the last few days. Very, very, very nominal. Okay, I don't want anybody to think like, oh my God, Kevin's flip-flopping or whatever. So I know sometimes people don't listen to the whole video. And I gave some very clear updates and as unbiased as possible opinions regarding the Twitter situation. Although I think at this point, y'all know my biases. And it is clearly that you need to check out with coupon code PEEPEE because we don't have sponsors on this channel. And the only way I put bread on the table is by providing value to you, whether it's through course member live streams, our $5 million trading challenge where we're building up a trading account to $5 million by the end of next year. Starting today is when we started. Doing more lectures for free, and of course, posting more videos. So if you see me posting more videos on YouTube and you're frustrated because you're not getting all of the notifications, all you have to do is, see, we've already solved this problem, is type Meet Kevin into your Android or Apple App Store, download the Meet Kevin app, and you will get all of the notifications should you want all of the notifications, because YouTube will only send you 3 notifications in a 24-hour period. But in addition, the reason I provide more value by making more videos or providing more lectures or doing more live streams or coming out with new courses or whatever is because, what do I say on the channel? We're in a recession. And in a recession, you should work harder. And guess what I'm doing? Check out with coupon code PEEPEE, link down below. Thank you for being here. We'll see you in the next one. Good luck and goodbye.